Hey, what's going on, guys? This is Daniel, one half of the Kwak Brothers, and we're providing market updates on what's happening. Today, we're going to talk about commercial real estate. Welcome back, guys. In this video, we're talking about the commercial real estate space and where it's at currently. Now, I want to start with what happened in terms of the headlines that's going on right now and in this week. Now, the biggest thing that I've seen in terms of what's happening and how it's going to affect real estate is this concept called negative rates. I don't know if you guys have been seeing the articles that's been going on, and there's actually some countries around the world that are actually utilizing negative interest rates. Now, before we move on and my opinions on should you buy commercial real estate right now, I want to talk about what negative rates mean. So this means pretty much that the bank is going to give you money when you get a loan. Now, here's a caveat to where a lot of people don't understand. This also means that if you were to deposit your money in a bank, instead of making money on a savings account, that actually is reversed to where you're actually losing money and cash becomes a very poor investment. Now, why would the banks want to do this? Well, let's think about it, guys. They're doing this to incentivize movement of money. One of the things that I talk about very frequently in monetary policy is this concept called the money supply. Now, the faster the flow, the supply of money moves around, the healthier, arguably, an economy is going to be because, well, money is moving around and means and more people are making money as the money is being moved from one entity to another. And economies and banks love seeing that because, well, that's how they make their money. A majority of profit from a bank comes from them loaning money out to you, whether it's in the form of a residential loan or a commercial loan. So having said that, guys, click on that subscribe button as we provide you more updates on what's happening real time in the market with commercial real estate. And speaking of commercial real estate, let's go ahead and address the big question. Should you buy commercial real estate right now? Now, guys, here's the quick answer. I'm going to get to the point, and I'm going to say, generally speaking, in my opinion, that answer is no. Right? And I think that's not that big of a surprise. You've probably heard a lot of different hundreds of other YouTube guys that are saying the same things. But not only that, I'm going to tell you why, and I'm also going to tell you when you should buy. Now, let's talk about this. If the answer is no today, and by the way, if you have a solid deal and it's off market and you have a strategy that's working currently and it's not going to be that affected by what's happening in the economy or the pandemic, go for it, right? Like whenever I give you guys an answer, it honestly depends on everything. And truth be told, 99% of all answers to real estate related questions is it depends. Depends on you, depends on the market, depends on the capital resources team. I mean, it depends on so many things. But generally speaking, my advice and my opinion is no. And that leads us to the question, well, Daniel, when should you buy, right? How should you buy? Why should you buy? So let me start you off with a little story, right? I remember about 2 years ago, it was, I believe, February of 2018, I got asked to speak at a conference, and there was a lot of people there. And well, when conferences happen, a lot of masterminds occur. And well, during one intimate mastermind, I had one gentleman come up to me, and he phrased himself as a very successful real estate investor. Matter of fact, he couldn't wait to tell me that he was in the middle of a 120-unit building. He was going to rehab it, and he was going to rent it out. Like everything was going to be great. And what disturbed me so much was that he had actually bought the property on a 3-year interest-only commercial loan, meaning that for the first 3 years of a loan, all you do is just pay the interest, and at the end of the 3 years, he would refinance and he would get the terms, he would get whatever it may be, and readjust his loan for a longer-term fixed rate, hopefully is what he was hoping for. Now, not only did he get this on an interest-only loan, but he bought the property at a very low cap rate, right? And cap rate, pretty much, long story short, is short for a capitalization rate. It's how much are you willing to pay for a certain stream of income. The lower the cap rate, the higher the price. So that tells me that his price of acquisition was already a lot higher than what it should have been. Now, here's why I'm worried about that. Here's why I'm worried that he got an interest-only loan and he's going to have to refinance 3 years later. What worries me is that 3 years later, a bank may not be as favorable if the value isn't as high as he had anticipated. So what this guy's strategy was he was going to buy this building, he was going to take an interest-only loan so that his holding costs, right, the cost that he's going to have to pay to the bank to keep the property while it's being rehabbed, while there's no income coming in, which is why you want a low holding cost to mitigate the fact that you're not having any income. He wanted to mitigate that risk, quote unquote, and he wanted to pretty much rehab it and hopefully have enough equity, right? Because when you rehab something, you make the value of it overall go a lot higher. the value between for what you bought it for and what it will be after rehab, that's your equity. He was hoping that that was going to be a big enough spread to be at least able to, refinance and get a new loan and be very favorable in the eyes of the bank. Well, guess what was happening in 2018? Real estate prices were at an all-time high, especially in the commercial market, and I haven't bought a thing in 3 years for that reason. Commercially speaking, I bought a couple residential, but commercially speaking, I haven't bought anything in the last 3-4 years for that exact reason. The prices are super high. And well, guess what's happening right now? The price in the commercial real estate market is slowly and surely going down, right? I think it's not a secret at all. We see what's happening with office complexes as corporations and entities are now starting to see that their employees are able to work from home and they're not really needing a huge space. I mean, I think I was talking to my friend John, who was on our YouTube channel before, and he talked about how the CEO of Morgan Stanley came out and says, I'm really starting to rethink whether or not we need retail space to house all our employees. So there's a lot of things going on in speculation that's leading to the drop of value in the commercial real estate market. And well, let's think about this for a second. If you're rehabbing a particular commercial property, a 120-unit building in this case scenario, and you're paying just an interest-only loan, you're not building any equity, you're paying down any principal, and you're really anticipating for that value to go a lot higher so that you could refinance and you're bankable, well, what happens when the value doesn't go as high as you anticipate, right? And it wasn't a secret that in 2018, we were right in the middle of a bubble in terms of these values going higher and higher and higher than what we were comfortable with. And what disturbed me about this guy was that, well, when you're already buying at a high price, there's not a whole lot of room for you to grow. My anticipation and prediction would be that his value right now actually is probably lower than what he bought it for, right? And in the other video, I talked about the residential market, how there was a 35% drop just in the value. So imagine what that does to the commercial market because, well, with commercial, especially with office complexes and, and even apartment buildings, you're not talking about individuals who own their own home and are super incentivized to keep it at nice shape, to keep it in, you're talking about renters who may skip out on the rent, right? I think that's one of the biggest topics going on right now is the rent strike. So for that reason, that is very disturbing. So when I heard that, I knew we had a problem in the commercial real estate market. I knew that a lot of these individuals were eventually going to be the ones that are going to have a downfall 2, 3, 4 years later. For example, right now, where it is 2, 3, 4 years later. And I'm going to end this thought with a quote, right? The quote, my brother and I say it all the time, but the uneducated buyer of today is the motivated seller of tomorrow. And that quote was very, very true 2, 3, 4 years from now. So imagine the opportunities that are going to come. As a matter of fact, I actually just had a conversation with my commercial lender, and I actually had an email exchange with him literally just last week, and I asked him a couple questions. I asked him, hey, if you don't mind me, asking, are you guys doing commercial loans right now? And what's going to happen when, the value of these apartment complexes and commercial real estate properties go below the balance of the note, right? The balance of the loan, meaning that the value of your apartment complex, whatever it may be, is lower than the remaining balance you have on that commercial mortgage you have with the bank. So the first question, his answer was, we are not doing any commercial loans right now unless they pay 40, 50% down and they're an extremely low risk individual. And by the way, guys, my commercial lender, he's not a part of a small community bank. Matter of fact, I'm not going to, without giving out the name, they're actually one of the biggest banks here in the Midwest, and they do business all across the board in terms of commercial, residential, HELOCs, you name it. And the answer to a second question in terms of, hey, what are you guys going to do when the balance of the loan is 100% or more of the value of the property? He says what we are going to do and what we are doing right now is if that loan to value ratio is above 100%, where the value of the property is equal to or lower than the remaining balance on the commercial mortgage, we're going to ask for a liquidity call, meaning that they're going to call up the individual who owns the real estate, who is the guarantor on the mortgage, and they're going to ask until the loan to value ratio drops to 80%, meaning that if you have a commercial building, and let's say right now it's worth $1 million, and the remaining balance on the mortgage in the commercial mortgage is $1 million, they're going to ask that individual to cough up $200,000 to keep the property, pretty much to make sure that they don't default on the loan. So that's where we are, guys. That's where we are right now. And again, my commercial lender represents a very large bank, and he says they're doing that all across the board when it comes to multifamily, office complexes, you name it. So for me, that tells me that's a very, very scary time, and the values are pretty much going to go down. That's the only direction that it can go. So at this point, you might be asking, so Daniel, that's all great. I'm glad thanks for sharing the information on what your commercial lender said, but when is the time to buy? So let's go ahead and summarize this. So right now we're in the pandemic mode, right? When it's talking about when the perfect time to buy, it's not right now, right? Right now we're in pandemic mode. There's a lot of things going on. There's a lot of volatility happening in the capital markets. And sure, there's a lot of stock market refugees where there's a lot of capital coming in, and the demand for these things is great. But that doesn't necessarily translate into real estate investing success, right? Matter of fact, I think if we're going to continue to review what's happening right now, last time I checked, the unemployment's at 34%. And to give you guys an idea in terms of how significant that number is, during the Great Depression, which was about 100 years ago, the highest the unemployment rate was, I believe, 19.8%. 12 years ago, in the Great Recession, the highest we've seen the unemployment rate was 9.9%, and that number was recorded in 2009. So we're at 34%, almost 4 times of where we were in the Great Recession 12 years ago. So that's where we are, right? That's where we are right now. The next stage, however, is going to be what's known as the default rate. Now, this is when we start seeing a bit of a higher jump in the default that's going on with these commercial mortgages, meaning that these people are not able to pay their mortgages, because whether it's rent, people lost their jobs, they're not able to pay their rent, their income is not able to suffice the debt service, or like we just talked about, the values drop and they get a little call from our friendly neighborhood bank, most likely the asset manager of whoever holds that commercial loan, and they're going to say, hey, listen, we're going to need you to cough up enough money to get the loan at this certain loan to value ratio. And i.e. in this example, my commercial lender said 80%. Get it up to 80% in terms of what the balance of the mortgage is compared to the value of the property. So those two things right there most likely will cause a lot of problems for people. Matter of fact, when I watch a lot of other videos in terms of these expert real estate investors, a lot of them are saying what I'm saying, meaning that a lot of people most likely are going to fall on tough times, especially if they're a landlord and they own these large apartment complexes, 50 units and up, and potentially even lower, right? We're getting commercial mortgages on obviously anything 5 units and up. So that could be a little bit of a problem for the landscape, the general landscape of real estate investors as a whole. And after the default rates, that's when we hit the bank REOs, aka real estate owned. That's when we see a peak in terms of banks getting these properties back, getting these apartment complexes back. And guys, banks do not want to hold on to these properties, right? If they don't make any money for the bank, if anything, they're a pain in the butt. They lose money from holding these pieces of real estate. They much rather make the money through the loan, right? By actually giving out the commercial mortgage so that somebody can actually acquire that building. This is the time you want to buy, right? Because a lot of banks, because they're motivated, they're incentivized to get these off their books, they may get you a discount. And I've seen, in history, I've talked to investors who've bought apartment complexes as low as 40, 50 cents on the dollar to their peak value. So when is this going to happen, you might ask? My anticipation and guesstimate, probably 9 to 18 months from now is when we're going to see this peak of bank REOs. And of course, after that stage is when the inflation happens, right? There's a recovery stage where, fiscal policy and monetary policy will do their best to try and get the economy back in order. And that's when we see the cycle and the bubbles happening yet again. Now, I don't know when that's going to happen. And truth be told, guys, I don't know what necessarily is going to happen for sure. They're making predictions that the Federal Reserve, they're going to go to a $12 trillion balance sheet. Right now, it's at 6.6, 6.7 around there, which is already astronomical. So guys, I don't know what's going to happen, right? Because so much of this rides on, well, what's going to happen with the pandemic? What's going to happen to the stock market? What's going to happen with the Federal Reserve? Are people going to pay rent? There's so many questions up in the air right now, which is why it's super important for you to like this video and also subscribe so that you can stay informed on what's going on. And of course, Sam and I will do our best and work tirelessly to bring you the best content possible so you can stay up to date and take care of your overall financial health. So again, guys, like this video. I'll see you guys in the next one.